Hey everybody, Boris, speaker Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, and Kiwi dollar for April 30th, May 4th, 2018. And the com dollars this week are, as usual, they're very much their own idiosyncratic story, but there's some interesting side stories of one com dollar against the other that I think are going to be developing. We'll take a look in the cross section as well. Essentially, the com dollars also collapsed against the dollar, though not in an equal fashion to the majors. Aussie dollar was lower, certainly because of the yield compression, and now is trading very close to that key 75 support level. Dollar CAD held up the best of all because it's had a lot of back and forth on NAFTA flow and stronger oil prices, but it remains, I think, in a much wider range of 126, 130 at this point. And Kiwi dollar continued its just downdraft to the downside. It was really amazing. It was a 7th straight day, I think, of losses for the Kiwi dollar, but it now comes to this very, very strong support at the 70 level, and I think Kiwi dollar has some relative strength inside of it, especially because we do have some Kiwi data this week. Let's take a look at the com dollar data this week. It's not a lot, but there is some significant stuff on the calendar. We obviously have the manufacturing index for Aussie. Then on Tuesday we have Tuesday night to us, I guess Tuesday day to you guys, the RBA cash target, which is expected to be very much unchanged. I think it's going to be the 18th or 19th month. The RBA keeps rates essentially on tap. But what's interesting that day is that on Wednesday to you, which will be, I guess, Tuesday afternoon to us, we also have the New Zealand employment data. Now, we're bearish this data because manufacturing employment was stronger, but services was weaker, so there is sort of a mixed picture. But if that happens to surprise to the upside, then you have a really strong chance that I think Aussie Kiwi corrects some of its recent gains as we go forward. So in many ways, this is going to be the critical com dollar event front of the week with RBA Tuesday night and then Kiwi data on Wednesday, and then we move on into the rest of the week, and then Canadian data comes out. We have Canadian merchandise data on Thursday, and I think we have Canadian GDP, I believe, on Thursday as well. Those are the only two data sets. We do not have Canadian labor data this week. It's going to come out next week, so it'll be its own, very much its own event. So it's really going to be a focus on the Antipodeans, on the Australian data and the New Zealand data to see how well things shape up. Let's take a look at the charts and just see how everything looks on the com dollar land. So here's Aussie. It held the 75.50 support area, very much like the euro that came back up as U.S. yields backed off the 3% level. This really becomes very much a yield trade, as we've been talking about forever. If U.S. yields can regain and recapture the 3% level, then Aussie certainly comes right back down to 75. If we start sliding back towards 190, then we definitely trade back to 76. Having said this, though, I still think that this is, after having broken support here pretty significantly, any trade back up here is a sell. In what I think is going to be a longer-term downtrend, possibly down to below the 75 level in the Aussie dollar. With Kiwi had this really 1, 2, 3, 4, 5, 6, 7, 7, 8. 8 out of the last 9 trades were down days, and this was the first bottoming day here. The thing is, I think this has been where the lows here were 70. Let me look at the lows here. 70, 50, 70, 55, 70, 40. We've had essentially 3 days of holding the 70, 50 lows, and to me, it certainly has an opportunity here to trade back up to 70, 71, 50, maybe even as high as 71, 72 on a corrective basis. If the employment data proves to be positive, we certainly have a So if I'm going to pick a rebound trade at the beginning of the week, I kind of really like the Kiwi as a rebound trade. Not for much, but 50, 60 points to the upside I think is reasonable given the fact of how we are oversold and how the 70-50 has really held for 3 straight days going forward. And then finally, we're looking at CAD. It's actually the opposite. It's the flip side, but it's sort of the same side, that the dollar has not been able to make any further progress against CAD for 3 straight days. 2,900 has held for 3 straight days, and we have a chance here to slide down. Now the CAD, of course, has its own idiosyncratic stories because there's just fast and furious negotiation on NAFTA. If there's positive news on NAFTA, this completely accelerates the move to the downside. If there's negative, we could come right back up towards the 29. Ultimately, it feels like NAFTA is going to come to some sort of an amicable arrangement. So I think the market is not in any way, shape, form pricing a complete collapse of talks. If that were to happen, you can forget this 29. We'll bust all the way up through 30 and 31 on some what I would call existentially bad news. But I don't think anybody is really expecting, given the tone of the communications and the absolute necessity to some sort of a deal, for that happening. So that means that if we have some positive resolution, we have a chance here to come back down towards the 2,700 on dollar CAD. Both of these, Kiwi dollar to the upside, dollar CAD to the downside, are showing that at least for the very, very near term, maybe front of the week, the upward momentum of the dollar has stopped, and we could have a little bit of a turn trade as we go forward. Wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.